Most people, even the wealthy and experienced, achieve long-term success by investing in broad index funds, not by trying to pick the next hot individual stock. They give you instant, powerful diversification. Okay, that's the theory. Here is the concrete 4-step action plan to get started today. Step 1, choose a brokerage account. This is simply the platform, the digital bank, where you'll buy and hold your investments. Look for a large, trustworthy platform available in your country that offers low to zero transaction fees. Fidelity, Schwab, Vanguard, and even newer platforms like Robinhood or others globally are common choices. You open an account, link your bank, and you're ready. Step 2, choose a broad index fund. You don't need a dozen funds, you need 1 or 2. I recommend looking for one of these 3. A total market fund buys thousands of US companies. An S&P 500 fund buys the 500 largest US companies. Or a global world index fund buys companies all over the world. They are all excellent. Pick one and stick with it. Step 3, automate your contributions. This is one of the most important things you'll do. Go into your broker and set up an automatic monthly or bi-weekly deposit, even if it's only $50 to start. This eliminates emotion and ensures you are buying shares consistently, which helps you benefit from a concept called dollar cost averaging. You'll buy when prices are high and you'll buy when prices are low. Over time, your average purchase price evens out and you take full advantage of long-term growth. Step 4, stay consistent and most importantly, do nothing. Your only job is to feed the machine and let the compounding miracle work. Don't try to time the market, that is, trying to buy at the absolute low point and sell at the absolute high point. It simply doesn't work consistently. You cannot predict the future. Focus your energy on earning more money to contribute, not on checking your portfolio daily. Now that you know the simple path, let's make sure you don't fall into the common traps. Most beginners lose money because they break the consistency rule and fall into one of these. Trap 1, chasing hot stocks. You hear about a stock that just shot up 50% in a month. You jump in, hoping for another quick gain. More often than not, you're buying at the top right before it drops. Investing is a marathon, not a lottery ticket. Ignore the hype. Trap 2, buying and selling too often. Every time you buy or sell, you incur fees and often taxes. More importantly, you dramatically increase the chance you'll miss the market's best days. Studies consistently show that the most active traders have the worst returns. Buy index funds and hold them. Trap 3, panic selling during a market dip. This is the deadliest mistake. When the market falls, and it will fall, sometimes sharply, your brain will scream at you to sell everything before you lose more. If you panic sell, you lock in your loss and guarantee you miss the recovery. Instead, if your job and income are secure, a dip is a sale. You keep buying automatically. This is where your conviction pays off. Trap 4, investing money you might need soon. Investing is for money you won't need for at least 5, ideally 10 years. If you're saving for a down payment in the next 2 years, keep that money in a high-yield savings account, not the stock market. You need the time to weather the inevitable short-term dips. To make this as easy as possible, let's give you a clean, easy-to-manage, and globally accepted starting point. I call this the 80-20 core. 80%, a total U.S. stock market index fund, or S&P 500 index fund. This gives you your high growth engine, 20%, an international stock index fund. This ensures you're not dependent on just one country's economy. That's it. 2 funds. Automate contributions, hold for years, not weeks, and don't look at it more than once a quarter. This setup gives you massive diversification, captures global growth, and most importantly, gives you peace of mind because you know you are participating in the entire market, not betting on a single outcome. Investing doesn't need to be complicated. If you follow today's guide, you have the knowledge to avoid 90% of beginner mistakes and are set on the same wealth-building path as the world's most successful investors. Start simple, stay consistent, and give your money the most powerful gift of all, time. If you found this clear, practical guide helpful, please hit the like button. And for more clear, jargon-free financial education, subscribe to the channel. What is the first index fund you plan to buy? Let me know in the comments below.